Today is Monday, January 29th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the grains this morning, Mark, what will traders be watching this week in regard to the agricultural markets?
Well, I'd argue South American weather will continue to have the largest role in determining price direction this week, and in particular forecast for Argentina. Conditions here have been favorable for much of the growing season. However, last couple of weeks we have trended a little bit hotter and drier. Concern isn't terribly high just yet, as crops can get by on subsoil moisture reserves. However, stress will be on the rise by weekend with heat and dryness this week. By this weekend, some relief is forecast to be on the way with cooler temperatures and scattered showers. However, a better rain event is scheduled for days 8 through 10 of the outlook. So after a rough start in Brazil, shifting gears a little bit through in mid-October through mid-December, conditions here have improved significantly over the last 5 to 6 weeks. Recent rains have improved crop prospects across the north here this past week, with this moisture expected to drift south by the end of this week, improving crop prospects for much of the country.
Mark, with nearby beans back below $12 this morning, what do we need to see for this market to put in a bottom?
Well, I think the biggest thing weighing on soybean values right now is weaker basis levels coming out of Brazil. Their prices are already $1 below the U.S., with harvest only 11% complete as of late last week. So obviously this does not bode well for U.S. demand moving forward over the next several months. Chinese demand has been weaker than expected as they pare back their domestic hog herd, while also the collapsing real estate market also weighs on economic growth here. So that I see the next big support coming in for spot soybeans is right in that 1170, 1175 area. If violated, the next support comes in at 1145. Speculative traders continue to pile up on the short side of the market, with holdings now in excess of just over 90,000 contracts. That said, however, it's still nowhere near a record short from nearly 5 years ago at 170,000. So before I think we can carve out a bottom, we need to be much more competitive with South American prices.
Lastly, Mark, we have some key monthly usage figures coming out later in the week. What are you looking for here?
Yeah, we have, after the close on Friday, we have soybean and grain crush from December. We look for a record amount of soybeans to be crushed during this month, right in that 205, 206 million bushels. That would be up from the record of 201 back in October of last fall. In corn, I look for ethanol production, corn used for the production of ethanol at around 475 million bushels. And if realized, that would put usage figures in the first 4 months of the marketing year up about almost 7% from year ago, and supports the USDA's recent decision to raise corn usage here 50 million bushels. And I think probably more importantly, on Wednesday, we do get our monthly update on biodiesel and renewable diesel production capacity and feedstock usage figures from the EIA. Here, I'll be eager to see if production rebounded after declining in the month of October, see if we saw an increase in November. This does look back a little bit of a ways, and also be eager to see if bean oil usage can start to show some rebound in usage there. We've seen used cooking oil cutting into bean oil consumption a fair amount here the last couple of months of reports.
Yeah, a little bit more demand can help these markets. Alan,
sure could.
Looking at the financials, how are the increasing tensions in the Middle East affecting financial futures?
Well, we're seeing all of the flight to quality vehicles responding as you would normally expect. We have the U.S. dollar trading higher and about to break out of a 10-day trading range. The interest rate futures markets are higher, especially at the long end of the curve. Also, gold and silver are higher, which they would normally not be when the dollar index is firmer. So that confirms that it's a flight to quality move that is moving markets. So I'm inclined to believe that the trends that we're seeing this morning will probably follow through, at least in the short term.
Alan, one of the things that we're not seeing higher with tensions in the Middle East is crude oil. Typically, when we've had tensions in the Middle East, historically, you've seen crude oil, run higher. What's the story there?
So that would suggest that there is too much supply. For the crude oil not to respond, I would have to say is a sign of weakness for the energy complex and of course the crude oil. So I think it's a sign of weakness that we may see some follow through pressure in the crude oil market, since it did not respond as you would normally have expected with the news that we did have over the weekend.
And looking at interest rates, what will the Bank of England, the European Central Bank, and the Federal Reserve likely do at upcoming meetings?
Okay, well, we have the Bank of England likely to leave interest rates unchanged at its upcoming meeting. That's the Thursday meeting. There's growing speculation that the European Central Bank will lower rates sooner rather than later. In fact, this weekend we did have a ECB official indicating that borrowing costs could come down, possibly, at least the implication is maybe at their April meeting. Of course, they just had a meeting recently with no change, but at the April meeting, there could be a cut from the ECB. And of course, the Fed on Wednesday will probably keep rates unchanged. It's widely expected. There's a 50-50 chance at the March meeting that the Fed could cut, and a much greater probability that the Fed will be reducing interest rates at the May 1st meeting.
Lastly, Alan, key reports this week?
Okay, Tuesday, we'll have the January Consumer Confidence Index. The estimate there is 112.5. The December JOLTS, Job Opening and Labor Turnover Survey report at 8.7 million. Wednesday, of course, the FOMC meeting with no change likely there. But also we'll have the press conference, Powell's press conference, following the statement from the Fed at 1 o'clock, the press conference at 1:30. So I think it'll be more interesting as far as what Powell may say than anything else with that meeting Wednesday. Thursday, jobless claims at 214,000. The January manufacturing PMI at 50.3. And then the January Institute for Supply Management Manufacturing Index at 47.4. And then finally, Friday, the very important non-farm payrolls report guessed at up 170,000.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.